It's always puzzling why food and fibre prices often follow the broader equities markets. The stock market crash late last week was followed slavishly by widespread selling of ag commodities. Now, there are many reasons for this, I guess, but chief among them is that speculators are now on the run, and genuine end users of these ag commodities get caught in the backwash. Chicago was an ocean of red ink. I couldn't find one commodity that did not come under heavy selling pressure. Adding to America's problems, they're being slaughtered in the marketplace by Russian wheat. Egypt, the world's biggest wheat buyer, bought 240,000 tonnes of Russian wheat last week, not one grain from America. Corn slumped as traders put the jigger into a long-term trend, and soybeans tumbled to a 6-month low. Incidentally, that big sale of wheat to Egypt, I'm told Australia tried, as did France. They weren't even close. Now, the local spot price for wheat was clipped substantially last week, and there was a small gain for sorghum, while canola is holding up pretty well. That wheat price is $35 behind this time last year. Canola is $160 ahead, while sorghum is another which is below last year's quote. Things might improve, however, especially if our dollar stays on that black run. It's a lot easier to sell Australian wheat at 98 US cents than $1.10. Let's look at some good news, and the cattle markets closed in front of the global slump with numbers up and prices firm to strong. The National Livestock Reporting Service holds the view that restockers are currently the backbone and the key to the market. Prices, most indicators went up a fraction. The restockers are very keen on young heifers. Processors are waiting. The warmer weather will no doubt give a lift to numbers and influence prices. This left the Eastern States Young Cattle Indicator steady at just above $4 a kilo. Live export demand is strong. Ships are planned or being loaded from Townsville around to WA, and prices are firm. Steers are in demand at $2.10 and heifers are at $1.95. Townsville prices $1.85 and $1.70. Now, the big news in the north last week was some progress at last in the much talked about abattoir in the top end. AACO has selected a site about 50 kilometres south of Darwin. The company wants the abattoir up and running by next year, and they plan to be very active.
We see the plant operating 12 months of the year. A big majority of that will be on a double shift.
Some other plans for the abattoir include a workforce of around 270 and the ability to process 1,000 cattle a day. Moving on now, sheep and lamb numbers lifted last week. It looks like restockers want some confirmation that there's a good season ahead before they start hanging on to stock. The exception is Western Australia, where sheep numbers are very, very tight. So lambs fell below $5 and mutton had a hefty drop as well. It'll be very interesting to see how long that lamb war between Coles and Woolies will go on and what it does to demand. Finally, to wool, where buyers must be having nightmares with the exchange rate. These sales finished last Thursday, and by Friday morning, the Aussie dollar had dropped about 6 cents in just a few days. Buyers from China were again on top, while Italy was keen for the finer wool. So by late Thursday, the Eastern Market Indicator dropped more than 3% to close at 1,235 cents. And that's the Landline check on prices.